Your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com on this Tuesday, and it really is a bloody Tuesday with a lot of red all over my screen here, as pretty much the price of everything other than maybe Treasury bonds is dropping. The Dow Jones now down over 200 points. You know, that's on top of the 250-plus points it lost yesterday. In fact, looking at it, I think the Dow Jones is now down about 19% in this decline, which puts it very close to what Wall Street, how Wall Street defines a bear market as a 20% decline. The S&P 500 already down by just over 20%, as is the NASDAQ. Other indexes doing even worse. The Russell 2000 now down 30% from its peak, not its record high, but the peak this year. The same thing with the Dow Transports, now down better than 30%, leading the markets lower. Particularly weak, although not today, but yesterday, were the airlines, and I'm going to talk about them in a little bit. But everything going down today, all the currencies down, dollar is up, although the euro down against the dollar is up against pretty much all the other currencies today, with the exception of the Japanese yen. I think the euro is bouncing around a 10-year low against the Japanese yen. But the real weakness today is in the Canadian dollar, the Australian dollar, the currencies rather that are associated more with economic growth, but they are getting pounded today against other currencies. Even gold is down about $13. Of course, the percentage decline in gold is well below the decline in the stock market, so the Dow gold ratio has really gone down. In fact, gold was up about $20 yesterday, so the Dow gold ratio moving close to new lows for this move. Let me see if I can quickly calculate it in over here while I'm doing it. About under 6.5 to 1, which is pretty close. I think we might have got a little bit lower at one point when gold was up around 1,900. But this is really close to a new low in that measure. Bonds, new lows on the yield, highs in price. The yield on the 30-year all the way down below 2.7%. This is a new low. The 10-year, not quite a new low for the move, but back down to 1.74. People are fleeing stocks and buying bonds and buying dollars. Again, I think they're making a major mistake by buying dollars, but in the short run, it doesn't seem to matter. That's where the momentum is flowing. You know, Ben Bernanke is scheduled to speak a little later today. We'll see if he gives any hint thus far that he's about to cry uncle. But I think he will. I've been saying that once the Dow, even gets below 10,000, he's going to be under a lot of pressure to cave in and supply the money that the market craves. And, the Dow is now 10,468. And, of course, I talked on this show before about the rising wedge that was in the stock market that we had broken to the downside. We are now decisively below the support level on that wedge. And technically, there is more downside left to come in the market. We'll see how the Fed chairman reacts. Ever since he announced Operation Twist, he's really put the squeeze on stock prices. He was able to get interest rates to go down, but he made the stock market collapse as well, and this is really going to be obviously problematic for the president and all the incumbents as they are trying to get reelected as the bottom is dropping out of the economy. Clearly, that is what the stock market is indicating, particularly in the transport sector. And I want to talk a little bit about what's going on in the airline industry. AMR was the story du jour yesterday. The stock dropped by about 35%. Again, I'm talking about individual stocks here, not making any investment recommendations. I'm not allowed to. I wish I could, but I can't. So I'm just talking about stocks as an economic story, not as where to invest your money. But AMR was down about 35% yesterday on rumors that maybe they were going to file for Chapter 11. Of course, most of the other legacy carriers, such as United, Delta, U.S. Air, have already gone through Chapter 11 bankruptcies. And, of course, all that was following the last bailout of the airlines. If you don't remember, the U.S. government under George Bush, W. Bush, bailed out the airline industry in 2001. So they got plenty of federal money, yet still managed to fail. Remember, they got $5 billion in direct compensation from the government, went right to the airlines. They also guaranteed $10 billion of their debt, And also, if you remember, the 9/11 victims were compensated by the U.S. government in exchange for which they agreed not to sue the airline. So all sorts of taxpayer money was funneled into the airline industry in 2001. Yet despite that, companies like UAL and US Air went bankrupt anyway. Delta, I believe, as well. But AMR was one of the only companies that did not go through the Chapter 11 bankruptcy. And now the rumor is they're the next to go. They've got the highest labor costs of any of these older carriers. But the broader problem for the airline industry, other than the fact that it's got too much debt and the labor costs are too high, and of course, once interest rates eventually rise, I mean, these guys are going to be smoked. But lower interest rates are somehow keeping them afloat right now. But the real problem with the airline industry is that it's much too big for the poorer American economy that exists today. You see, there's a lot of capacity in the airline industry based on the fact that at one point in time, Americans were rich. We had extra money to spend on air transportation. We weren't loaded up with home mortgages. We weren't loaded up with credit card debt. We didn't have wages that were shrinking in real terms as the cost of food and energy was rising. We didn't have all the regulations and taxes that we have today. So Americans had more discretionary income, and so they can afford to get on a plane. They can afford to fly. And so airlines built up a lot of capacity to take care of wealthy Americans with discretionary income. Well, those Americans are gone. Most Americans now are too broke to really afford to fly. So what happens is the airlines, in order to put butts in the seats, are dramatically discounting the price of their tickets. As a result, the airlines are losing money. AMR hasn't made money in 4 years. It's had 4 years of losses. And even though some of these companies have made money recently, they end up blowing it. I mean, if you look at these stock prices of these airline companies, I mean, AMR, which right now is at $2.27, that's up 15% on the day. 10 years ago, the stock was in the 20s, so it's lost 90% of its value in the last 10 years. That's actually done a lot better than a lot of the other airlines that have lost all their money when they went bankrupt. But if you even look at UAL emerged from bankruptcy, and the stock resumed trading at about $40 in 2006. It's at $17 now. So it's way down. Delta Airlines, same thing. Came back out of bankruptcy in 2007 at about $23. The stock is $6.80. All of these stocks, look at U.S. Airways. U.S. Airways came out in 2005 at about $20 as well, and the stock is $4.74. So nobody who owns these airline stocks, the shareholders, are not making any money. They're flying all these planes around. They're selling all these tickets, but the companies are losing a fortune for the people that own them. This obviously cannot continue indefinitely. Something has got to happen soon to restructure this airline industry, and I believe it's going to. And I'm going to talk about that as soon as we get back from this break. Anyway, you're listening to the Peter Schiff Show here at SchiffRadio.com. And this is Peter Schiff at SchiffRadio.com, and we're talking about the airline industry and the coming consolidation. And I said, the problem is we have an airline industry with much too much capacity, given the fact that Americans are actually too poor to afford to fly. And so what is going to happen is we're going to have more bankruptcies in the airline sector. I think that a lot of these airlines are going to go bankrupt again. They still haven't addressed the real problems. And they're going to have to dramatically reduce the size of their fleets and the number of routes they fly so that they can fly fewer planes that are full of people who are paying much more money for the privilege of flying. And so what's going to happen is the price of air transportation in America is going to have to rise dramatically, because right now the tickets are actually being subsidized by the shareholders, who are losing a fortune to enable their passengers to fly on planes for way below what it costs them to provide the services. So I think that is going to have to contract. Even some of the airlines that are price competitive, like Southwest Airlines, I mean, look at the price of Southwest Airlines. I mean, that stock was at $16 10 years ago. It's at $7.50. So the shareholders there are not making much money. There is a small dividend yield there, but not really helping the shareholders. I mean, air transportation is not a public service. You know, people are providing it to try to make a profit. You know, look at JetBlue. I mean, JetBlue is making money, yet if you look at where the stock was in August 2002, it was almost $15. It's under $4. It's $3.70. It actually got as high as $32 in October of 03. But clearly, the shareholders are not making any money. The passengers are getting a great deal, but the owners aren't making any money providing the service. So that has to change. They can't keep destroying capital. So they're going to have to restructure. But this is all symptomatic of a declining American standard of living. And what's going to happen to other industries when the cost of flying in an airplane doubles or triples, or who knows how much higher it's going to have to go eventually. And I'm not even factoring in the loss of value of the dollar or stuff like that. I'm just talking about right now, given the current dynamics, how much higher ticket prices would have to go in order for the airlines to earn a legitimate return on their investment. What would happen to the hotel industry or to the theme parks or all these types of companies that are now being subsidized because, after all, their customers are being delivered to their locations by airlines that are losing money, on the transportation. So all that is going to change because now there's going to be fewer people showing up at these destinations. So it's going to hurt all sorts of other leisure-related industries that depend on air travel for their customers. All of this is going to be happening, and it's an unfortunate sign of our lower standard of living. Now, I wonder if the government is going to get involved again. You know, the Obama administration did not allow a legitimate bankruptcy to take place for GM and Chrysler. What are they going to do this time around if AMR were to go bankrupt? Or what about any of the other airline industries if they were to go bankrupt? Is the government going to sit back and allow a market-based bankruptcy restructuring, or is Obama going to come in to try to save the jobs of the unionized employees? You know, part of the bailout too, when a lot of these airlines went bankrupt back in 2004 or 5 or whenever they all went bankrupt, the government ended up having to pick up all the unfunded liabilities, which means us, the taxpayers, had to pick up all the unfunded liabilities for the pension funds. I mean, this was billions and billions of dollars that was lost. The same liability is going to be there again in a bankruptcy. Now, it's not only the airlines that had a lot of trouble yesterday. It was the banks. The banks getting hammered yesterday, hammered again today. Citigroup down another 5% at 21.40, new 52-week low. Goldman Sachs on the day, it's off the lows, but it's down 3.5%. 87 was clobbered yesterday. Morgan Stanley down another 4% today, below $12 a share. I mean, these stocks have just been getting hammered. I mean, Morgan Stanley was it just in February, the stock was at $31, so it's down, below $12. All of these financials, Citigroup, 52-week low, 21. This was recently spun off another company that was bailed out by the U.S. government, but the stock is imploding once again. Same thing with GM and other, government bailout. The government was trying to claim how much money they made off of GM. We'll try to figure out what that GM stock is worth now because they spun it off for, I think, around $33. It's now 19 and change. But all these stocks are coming under some intense pressure as people come to grips with the fact that we are back in a recession and potentially a depression. We'll see again what Ben Bernanke has to say. Maybe I'll catch a few of his statements and be able to talk about it before the end of the program. Meantime, let me grab a quick call. Alex is on hold from Fort Lee, New Jersey. Alex, welcome to the show.
Hi, I was wondering what your opinion is on all these stories about the Koch Industries and scandals going on there.
You're talking about the Koch industry?
No, the Koch, the libertarians who funded Cato and the Tea Party.
Yeah, but they pronounce the name Koch. It's a David Koch and his brother. What's his? Sometimes I blank on these names, but yeah, I mean, I don't believe all these conspiracies. I mean, I don't think this is some nefarious plot. I mean, yes, the Koch brothers are free market oriented or Republican oriented. They do raise a lot of money to support Republican candidates throughout the country. But it is, I don't believe in any, and they're not pulling the strings behind the scenes and determining what's going on, but they certainly are trying to help elect Republicans rather than Democrats. I mean, they are partisan, but they do believe more in less government and those principles that we generally associate with Republicans as opposed to Democrats.
I mean, just yesterday there was a bunch of articles claiming that they sold stuff to Iran that helped them make weapons, or that they leaked.
Yeah, I don't know. I didn't actually read. I saw some of those headlines. I haven't had a chance to read any of the stories, but there's all sorts of things. I remember one time, look, I spoke at some Koch event in Aspen, Colorado, a year or two ago, and I remember there was like a big thing there because the invitation had gotten out at who the speakers were, and it was like this, like it was some big secret meeting. But I was at the meeting. I can assure you there was nothing secret going on. It was just basic stuff. There were some people there talking about the free markets, and they talked about the need, to take back some of the Senate seats and some of the House seats and try to get the country moving back in the other direction. There was a lot of, Obama talk, nothing different than we hear all the time in the media or, at a Tea Party rally. Same old stuff.
Okay, thank you. I just wanted to see if it was liberal bias in the media or if it was really...
Well, I think they always want to try to vilify the Kochs because, A, they're rich, and so, they don't like rich people, so, they've got, several strikes against them simply because they're rich, and of course they're rich and they Republicans. That's strike two. I mean, the Democrats, they don't, or the media doesn't seem to mind if you're rich and you're a liberal. Like if you're, in Hollywood, for example, if you're an actor or producer, or you're making your money, but you believe in all these liberal causes, then they'll excuse the fact that you're rich. But if you're making your money purely in running a business in the private sector, you must be evil, you must be screwing someone over. And so they've got that against them. Then when they're raising money, they do raise a lot of money. And they just opened up at one of the chapters. They sponsor a group, Americans for Prosperity. In fact, the guy J.R. Romano, who was my campaign manager when I ran for Senate here in Connecticut, is now running the local chapter of Americans for Prosperity that just opened up a month or two ago. In fact, he was working for me at Europac, and he ended up quitting to go run that chapter. Anyway, hey, we will be right back. You're listening to the Peter Schiff Show on SchiffRadio.com. I'm back.
We now return to the Peter Schiff Show.
Call in now.
This is Peter. Excuse me, I was trying to watch some of Ben Bernanke's speech. He is speaking right now. I was interested to hear if he had anything to say that I wanted to talk about on the show. I guess we'll have to wait. Although if anybody is watching the Fed chairman and if he says anything particularly stupid or maybe that might affect the markets, you can call up and bring that a statement to my attention. I wanted to talk about this Occupy Wall Street movement because I've actually got a list of the demands that the people who are occupying, the young people who are occupying Wall Street have made. And it actually is kind of ridiculous when we actually look at what they want to say. In fact, in many respects, the people occupying Wall Street show even less understanding of economics than the 7-year-olds who we played the other day who were in that focus group on ABC, which shows that maybe the American school system can manage to take kids who, are relatively smart but just not, they don't really understand economics when they're 7 years old and really dumb them down to the point where they can be so completely brainwashed that they can actually draft this list of demands. But actually, even before I go through the demands, I want to play some sound from Michael Moore, who's got a lot of praise to heap on the Occupy Wall Street movement. Obviously, Michael Moore, being the shrewd capitalist that he is, senses a great marketing opportunity, PR opportunity, and so he is all over this Occupy Wall Street movement. But take a listen to what he has to say. Here he is. This is last night. Michael Moore, cut number one.
I think that
that not only is this going to continue, these cities that you mentioned, this is what's so wonderful about this. There really isn't anything driving this other than what Wall Street has done and what those who are in charge of our economy have done. They weren't just happy enough with having multi-billions. They wanted tens and hundreds of billions, maybe even trillions.
All right, so it's a wonderful thing that's going on, and it's all because of Wall Street. I'm not saying Wall Street is blameless, but it's not all because of Wall Street. It's all because of government and how it's corrupted Wall Street. But anyway, let's continue a little bit on Michael Moore. Again, he was on the Keith Olbermann show. Here, cut number 2.
They're kleptomaniacs is what they are. They're out of control. I think it really is some kind of a sociopathic illness, and they now want us to live in a kleptocracy where the kleptomaniacs run the show. This is going to spread. I said this last week. I said it 2 weeks ago when I first spoke with you. And the mainstream media was trying to just poo-poo this. Oh, it's just a few down there. Don't worry. Well, what happened on Saturday, not just here, but as you said, in Boston and L.A. and Chicago and elsewhere.
All right, so Wall Street, they're a bunch of sociopaths. They're kleptomaniacs, and they're going to get what's coming to them. I mean, these are some pretty strong words, and it shows you how this is backfiring on capitalism because of Wall Street's involvement in this crisis, the black eye that it's giving to capitalism, and the real ammunition that it is basically giving to the enemies of capitalism. Clearly, these protesters that want to occupy Wall Street are enemies of capitalism, because I'm going to play their demands in a minute. I'm going to go over their demands, but here's play this final clip from Michael Moore, number 3.
Wednesday, I just heard, is going to be National Student Walkout Day. This is going to start to organize on college campuses.
Okay, great.
This is going to dovetail with so many things. People who've lost their homes, the 50 million who don't have health insurance, all the disparate groups of people who've been affected by the greed on Wall Street. They have had it. And I'll tell you, President Obama, he'd be smart right now to not just give another speech, but actually have his Justice Department either have a special prosecutor or an investigation and go after the people that stole this money. The people want a perp walk. They want to see people led away in handcuffs with a coat over the head.
That's right.
And because that's going to be some form of justice.
Yeah, so let's vilify, the symbol maybe of this crisis, the Wall Street banker who got bailed out. But let's vilify and crucify them. After all, they stole all our money. All these people are unemployed. All these people are poor, not because of government, but because of greed on Wall Street. Listen to these demands that are being made by the Occupy Wall Street crowd. Here is demand number 1: restoration of the living wage. Demand an end to free trade, and they want to institute a new federal minimum wage of $20 an hour. $20 an hour? How many jobs are going to be destroyed if you force employers to pay everybody $20 an hour plus benefits and taxes? And, of course, what would happen to the price of consumer goods in this country if not only did we not allow the imports to come in, but we forced American companies to overpay their workers? Number 2, they want to institute universal single-payer health care system. They want to get rid of all private insurance companies and replace it with government. Where's the government going to get all this money to provide all this insurance? Here's number 3. They want to guarantee a living wage regardless of income, regardless of employment. So in other words, they want everybody in America to have a living wage even if they don't have a job. Well, if you can get a living wage, which I guess is $20 an hour, if somebody can have $20 an hour and not work, well, why would somebody want to have to work to get the $20 an hour? In other words, they want the entire country on welfare. Number 4, free college education for everybody. Where's the government going to get the money? I mean, who are they going to tax? They just wiped out all the jobs with a $20 minimum wage, and they put everybody else on welfare. Where's the money going to come from for free education? Number 5, fast track the process of bringing an end to fossil fuels. No more fossil fuels. How are we going to get around? It's all by bringing alternative energy. Oh, I mean, come on. They're going to destroy our standard of living. We can't use gas. Here, number 6, they want to spend $1 trillion on new infrastructure. Where's the government going to get that money? After all, remember, they just destroyed all the jobs with a $20 an hour minimum wage, and they just destroyed the economy with protective trade barriers. Here, number 7, another $1 trillion to spend on restoring the forests, replanting, establishing wetlands, decommissioning all of our nuclear power plants. Decommissioning all of our nuclear power plants. We've already got rid of all the fossil fuels. Now we can't have any nuclear power. We're all going to live off of solar. I mean, these guys are just so far up in the stratosphere. Then, of course, they throw in Demand 8, racial and gender equal rights amendments. Wait a minute. I mean, don't they already have equal rights? We need another amendment. They throw that in, to throw some red meat to the left. Here, here's what they also want. This one is a beautiful one. They want to abolish all debt. Here, point number 11, forgive all debt across the board, right? Home loans, mortgage, home equity loans, credit card debt, student loans, personal loans. In other words, they want to wipe out all debt. Well, then they wipe out all assets. Every bank is insolvent. All the insurance companies are broke. All the pensions are broke. They're going to wipe out everybody. If you say that nobody has to pay back their debts, then you say that nobody gets to collect on their assets, right? There's no more money. So all the old people, that have all retired, well, they're all going to have to come back and find jobs. Well, how are they going to get a job, especially when the minimum wage law is $20 an hour? I guess the one thing is going to happen is if we follow their advice, I guess a $20 minimum wage won't matter because the dollar will have absolutely no value because the government is going to have to give away free health care to everybody, free employment that is going to take care of the whole country, but they're going to have no one to tax because they would have destroyed the entire economy. They would have wiped out all the capital. See, businesses won't have any money to invest anymore because, all of their savings, all their investments are wiped out because the government cleaned out the debt. Now, this basically what these kids want would be the complete destruction of the U.S. economy. But this is how people think. This is a product of the American education system that we've turned out a bunch of socialist morons who have no clue how an economy works. They probably have less clue than those little 7-year-old kids. To think about it, yes, the government's going to give everybody money. The government's going to take care of everybody. It's going to provide the insurance for everybody. It's going to provide the jobs for everybody. In other words, this is a communist revolution that Michael Moore is applauding, right? These are their demands, right? Is this any different than what was going on in Castro's Cuba or in Mao in China or in Russia? No, it's the same. It's the same nonsense. But what is creating the climate in which this type of nonsense can actually flourish and gain a credible audience? It's the environment that was created by the very thing they're advocating, by big government, by central planning, by central banking, by the government that is trying to micromanage through the tax code and through regulations the U.S. economy. Instead of allowing the free market to lift all boats, you have government sinking all the boats. Anyway, let me go and see if I can grab some calls before the break. First up is going to be Chris calling from Rockville, Maryland. Chris, you're on.
Hey, Peter. How you doing? Good. Quick
I'm
question.
Good.
Have you heard about the Federal Reserve is now hiring companies to look into comments people are saying about them on social media sites such as Facebook, Twitter, YouTube?
Yeah, I read about that, so I'm assuming they're watching what I'm saying about them, too, because I talk about the Fed a lot and never in a positive way. So I'm sure they're monitoring what I want to say. But, yeah, there are people that are trying to read into that it's, some kind of big brother. I don't think they're trying to shut us down. I don't know if they're monitoring the critics of the Fed so that they can target them for some kind of prosecution. I do think the Fed wants to have an idea of its public perception. I think the Fed wants to know what is being said about their policies just to kind of monitor it, maybe because they think it's going to have some bearing on the effectiveness of their policies. I don't think that it is anything nefarious. I think legitimately they're concerned and they want to know how they're being perceived. And a way to look at that is to check the websites and to see how, what people are saying about the Fed and what they're doing. Anyway, I don't know if you have a follow-up. If you want to hold on, we got a break. We'll be right back. This is Peter Schiff on SchiffRadio.com. This is Peter Schiff on SchiffRadio.com. We're going back to the phones. on the line is Tony from Las Vegas, Nevada. Tony, you're on.
Hey, Peter. I have a question about foreign stocks. Every time the stock market corrects or starts to crash, foreign stocks get crushed. It's been doing that now for the last few years. The only difference I see between now and 2008 is gold and silver have decoupled. Everything else is the same. Bonds are up, dollars up, everything else is crashing. What's the rush to buy foreign stocks now? Why not just wait for everything to collapse, then come in and buy it? What's the point? Or wait for QE3 or whatever to be announced? What's the rush? I don't see why I should buy stocks now.
Well, I mean, I could tell you what happened from the decline in 2008, where a lot of people had that opinion, yet by the time they bought them, or they didn't buy them at all, because when you're waiting for the bottom, it's always hard to know where it is until after the fact. So, yeah, I mean, it makes sense. Let's not buy any stocks at all. Let's hold. I guess, what are you going to hold, though? Are you going to hold gold, or, because obviously you're going to have to hold dollars, and so you're going to have to hope that you don't wake up one morning and the dollar has collapsed out from under you. That's always the risk that you take. But then you're holding dollars and you're watching the stocks go down, and you're trying to figure out when they've stopped falling. Well, how do you know when they stop falling? I mean, you don't, right? I mean, you have to watch it rise for a while, but then after it rises for a while, how do you know it's not going to go back down and make a new low or retest low? And so sometimes while you're waiting to figure out where to buy it, the stocks could end up rising to a point that's even higher than it was when maybe you sold them because you were afraid. Like, there is a lot of volatility, which is why I don't recommend that people be in margin. I don't recommend that people have options. I don't recommend that people make investments where you have a specific time horizon, or you have leverage where you have to worry about the short-term declines. I think none of this makes sense. I mean, the only reason I think that foreign stocks are going down now more than U.S. stocks is because of the foreign exchange. It's because so much money is piling into U.S. dollars and U.S. treasuries. And that makes no sense. I think that the United States is at the epicenter of the global economic problems, and that the real resolution to our problems involves a big drop in the dollar. But the more the dollar stays artificially valued, right, the deeper into debt America is going to become, the more screwed up our economy is going to be, and the bigger the collapse once the world figures this out. So you could say, look, I'm not going to be in any foreign stocks. You could buy foreign bonds, but even, foreign bonds are going down now, too. They're not going down as much as stocks, but they're going down because the dollar is rising. So there's nothing that I look at as being a safe haven that isn't falling right now. I mean, gold is dropping now. It's just not dropping as much as it was in 2008. Gold stocks are also dropping. I mean, they're down 4% today, but they tend to be, they haven't been dropping as much as non-gold stocks, but all that can change. But I think this is all a bunch of noise. I mean, I want, the way I look at it is, if you own foreign stocks, you own companies, you own businesses, you own plant and equipment, you own assets, you own something real. If you own dollars, you just own a piece of paper. And right now, everybody is flooding into those pieces of paper because there's a perception that there's value and safety there. But it's all perception, in my opinion. And when the dust settles and the perception changes, I think the bottom will drop out of the dollar. And you see how fast the dollar is rallying right now. I think when it drops, it's going to drop much faster. I think you're going to see the dollar move down precipitously. One day it might be down 10 or 20%, then 30 or 40%. I think it's just going to implode. I mean, look back to how some of the currencies in Southeast Asia imploded in the Asian currency problem of, I think it was 1997, with the Philippines and Indonesia and Thailand, and how these currencies were imploding. I think the fundamentals for the U.S. dollar are worse than the fundamentals were for those Asian currencies back at that time. And I think the dollar can plunge just as quickly, especially when the whole world is trying to get rid of them. And there are no buyers. So I think you want to play it safe. I think you want to get rid of your dollars and accumulate other things. And I recommend a combination. Right? I'm talking about precious metals, foreign currencies, commodities, foreign stocks, foreign bonds, to try to spread your wealth around, because I think that's the best way to preserve it. Even if on paper your wealth is going down right now, measured in U.S. dollars, ultimately, I don't care what my wealth is measured in U.S. dollars. What if eventually the dollar is worthless?
Well, wouldn't it be safer just to put everything in gold and silver and forget the rest? You're protected by the dollar crashing. Well,
I mean, if you put all of your wealth in gold, so far it would have worked out that way over the last few years. In hindsight, I've recommended that people have a decent percentage in gold and gold stocks, but I'm never going to tell somebody to put all their money in one thing. If somebody wants to make that decision on their own, that's up to them. But it wouldn't be responsible for me to tell somebody, hey, just only own this. Only own gold. Gold doesn't pay any dividends at all. And what if gold goes down? What if what happens is I tell people just buy gold and gold goes down and stocks go up? What happens? Could I even survive the lawsuits? And, hey, he told me to put all my money in gold, and look at what I missed out on. I missed out on this big stock market run, and gold went down. It'd be too risky for me even to come out and say put all your money in gold. The fact that I'm telling people to at least put some, I say at a minimum 5 or 10%, maybe more, and then gold stocks. That's already a lot bigger gold exposure than your typical financial advisor would recommend. Most people don't even recommend any. They look at it as a barbaric relic, although I think that has changed a little bit in the last year or so. But 5 years ago, 10 years ago, I was probably the only stockbroker really out there telling people to buy gold.
Well, is there any chance, let's say the stock market crashed, right, and people are afraid to death. Is there any chance they'll even sell the foreign, and the dollar collapses? Wouldn't people still just sell foreign stocks and just put it all in gold and silver? Or do you think the dollar collapses, everything collapses, they'll eventually...
No, when it turns into a dollar crisis, I think it'll look very different. Look at any country where there is a collapse in the currency. In terms of the local currency, the stock prices go up. They might be going down in terms of foreign currencies that aren't losing value, but people still perceive this safety in the U.S. economy that does not exist. And it's all a function right now of the fact that interest rates are so low that we're able to handle all this debt. But that can change very, very quickly. And when it does, the perception will change very quickly. And I wouldn't want to take a chance. I couldn't sleep at night knowing that all my money was in dollars. I'd rather have it in a portfolio of foreign stocks, precious metals, foreign bonds. And I don't care about the short-term volatility because I know how the movie ends. Anyway, hey, that's it. We're running out of time. We got a break coming up. We got a guest coming up at the top of the next hour. So don't go away. You're listening to the Peter Schiff Show here at schiffradio.com.
Your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff. Hour 2 of the Peter Schiff Show is underway here at schiffradio.com. And now joining the show is author, survivalist Jim Wesley Rawls. He has been a guest on this show once before. He is an author and blogger. He edits the website survivalblog.com. And he has authored his latest book is Survivors, a novel of the coming collapse. Jim, welcome back to the show.
Thanks for having me on, Peter.
All right, so how do you see this coming collapse unravel, and do you think this Occupy Wall Street movement, it could be the beginning of these types of events unraveling here?
Yeah, I think you may be right. I think that the average American needs to be feeling a lot more pain before we see mass riots in the streets, but it could happen. As I'm sure you know, there's a big divergence of opinion whether we're going to see a deflationary collapse or a hyperinflationary collapse. I'm in the inflation camp personally, and I think once inflation really kicks in, especially with all the monetizing that's going on right now with quantitative easing, there's going to be a lot of pain. There's going to be a lot of people that literally won't be able to afford to eat because their paychecks are not going to gallop as fast as consumer price inflation. That could lead to riots, and Lord knows, it all depends on whether or not the power grid stays up. If the grid stays up, yeah, I think we may see a pretty lengthy depression. If the grid goes down, all bets are off.
Well, ultimately, I think the grid is going to go down because of lack of power, because as the dollar collapses, our ability to generate power is going to be greatly diminished. We're not going to be able to import all these resources from around the world, and many of our own resources are going to be exported to people who have stronger currencies. And the fact is now these Occupy Wall Street protesters, I read earlier today, one of their goals is they want all debt to be forgiven. They want the government to forgive all student loans, mortgage debt, credit card debt, second loans, everything, which is basically what inflation is going to bring about, only through a different pathway, because they don't seem to understand. If you wipe out all the debt, you also wipe out all the assets. All the banks are gone. All the insurance companies are bankrupt. The pension funds are bankrupt. I mean, you wipe out all this wealth when you wipe out the debt. But the problem is the debt is so large it can't be paid, so that wealth is going to get wiped out, whether the government forgives it or not, because it's going to get wiped out with a printing press.
I think you're right, Peter. I think it is a fait accompli at this point.
Yeah, and so what do you do? So what are in your book? What is the advice that you're giving? I mean, what should Americans be doing right now to prepare for this? And of course, usually when people give out this advice, I mean, the media looks at us looks at you like you're a kook, because you're preparing for what they believe to be as likely as an alien invasion.
Well, I've moved my family to a very lightly populated rural region west of the Rockies. We've got national forests surrounding our property, and we're pretty well hunkered down. We have a great, huge woodshed full of firewood. We have a large garden. We hunt, we fish, and most of our neighbors are in a similar mode. So I think that's probably the safest way to live. Of course, not everybody can do that. Even somebody that is living in the suburbs and feels stuck can at least lay in a good year or two supply of food with storage food and get themselves a good quality water filter so they can filter water from the runoff from their roof, from their downspouts.
Yeah, I've advocated that.
Simple things that people can do that will greatly increase their chances of survival.
Yeah, I've advocated that, but I've said even if you don't need the food from a survival standpoint, it's still a pretty good investment, because if you're simply buying products that you would have bought anyway a year or two from now, and if a year or two from now the prices are 10 or 20% higher, well, that's the same thing as buying a stock and making a 20% profit. In fact, it's better because you don't have any capital gains. You don't have to pay any taxes on the gains because you don't really have any gain. You just eat the food. And if it goes up in value between the time you buy it and the time you eat it, the IRS hasn't figured out how to tax us for that yet.
Yeah, there's a couple of more advantages. One is, of course, by buying in bulk, the unit price for each ounce of food you're buying is much lower.
Absolutely.
That's an advantage. And it's not just disaster insurance, it's also layoff insurance. If the family has a 1 or 2 year food supply squared away, if the head of the household gets laid off, at least that's one part of the budget you don't have to worry about during the time you're laid off.
Yeah, you got your food covered. So definitely it makes sense to cover the basis. So for a lot of people, though, the only problem might be they just don't have that much extra storage room, especially if they're living in a city and they're living in a small apartment. You barely have room to store, a week or two's worth of groceries, let alone a couple of years.
Yeah, although I've shown some things in my blog on how people can get creative with storage space in terms of, you can raise your whole bed by 16 inches and make a platform under your bed consisting of 5-gallon food-grade plastic buckets full of food. And that doesn't increase the footprint of your bed at all. It just raises it a bit and throw a dust ruffle around it, and then nobody even knows it's there. But you're sitting. That's
true. That's assuming that people aren't already using the area under their bed to store some of their other belongings. They might have their tennis racket, their skis, or some of these studio and 1-bedroom apartments are pretty small. Even the 2 bedrooms. But yeah, I mean there are they have these these little doohickeys, or I forget what they are, where you can really expand your closet space. I mean, so people might have to try to make do with the small area that they have. Some people could probably rent a small storage facility. Sometimes in some of these apartment buildings, you can rent some extra storage space in the basement. So that'd be a solution for some people.
Yeah, I do recommend, though, that if people are self-employed or retiring or near retirement age, that they consider making a move to the boonies now. 2 or 3 years from now may be too late.
Well, is there a lot of real estate available out in the boonies? Is it or do you have to build a place?
Fallen nationwide. including rural areas, and especially, surprisingly, in resort areas. But from a survival standpoint, I don't really recommend resort areas. For example, if someone in California wanted to move Lake Tahoe, well, yeah, prices have come down 40% for houses at the lake, but if you showed up at your house or cabin in Lake Tahoe right as things were falling apart, who else is going to be showing up? All your neighbors from the big city who are going to bring nothing with them. So you may actually be in a worse situation. You may end up in a situation where all your neighbors have is guns and no food. That's a bad situation.
Yep. But, what about, for the people, though, who are, you're saying, retired people, elderly people, what about, hospitals or, things like that? I mean, they need to be close enough to medical attention. I mean, what's that like out in the boonies?
Well, there's, if you move to, say, 30 or 40 miles out of Salt Lake City or 30 or 40 miles out of Spokane, Washington in the Northwest, there's, still fairly major medical centers available, and you're not that far out, and you're not even all that far out from shopping. But what you've done is put yourself in a more lightly populated, food-producing area with plentiful water. That's the crucial thing, is water and food. It's going to come down to that.
Yeah, although are they going to be able to protect that food? If you're elderly, you might not be able to, even if you've got, say, some kind of weapon, I mean, you might be easier to be overpowered. There might not be as much police protection out there in the boondocks if some of the people find out that, hey, there's people up there with food. But anyway, it's a very tough future to contemplate, but we will continue discussing it when we get back here on the Peter Schiff Show at SchiffRadio.com. So who are the main characters? When is it supposed to take place?
It's set in the near future. It's set in the exact same time frame as my first novel, Patriots. It's actually contemporaneous. And the main character is a young Army officer just being released from active duty in Afghanistan, and everything falls apart. All the commercial flights and the military flights get grounded because simultaneously there's some terrorism going on. He has to make his way all the way from Afghanistan back to his home in New Mexico in the midst of a global socioeconomic collapse. It's quite a
why doesn't he go someplace else? It's like, why doesn't he just go ahead to New Zealand or someplace? I guess he's got family members, yeah. So
it's basically, the novel is a vehicle to talk a lot about different tactics and techniques and technologies for family survival, family preparedness. So everything from firearms to communications, first aid equipment, you name it. It's all there in detail. And it's essentially designed to get people thinking and get people motivated to actually prepare. Not just be armchair commandos, but actually train and prepare and stock up.
Yeah. I think something is going to happen that is going to certainly have it make sense for people to have been prepared. I hope it doesn't get to the point where it's a very violent, dangerous situation to live in the United States. But, if we continue on our current path, that's unfortunately going to be what's going to happen, because people are going to react to their circumstances. And if they're unemployed, if they can't afford food, if there's no power because they can't afford energy, or if there's, all kinds of rationing going on, and people like these kids that are protesting on Wall Street, they're going to be blaming somebody and looking to find somebody, to go after, someone to attack. Just like Michael Moore played his sound, they want to see heads roll. They want people going to jail, and if they don't go to jail, maybe people will take justice into their own hands.
That very well could happen. And one other thing to consider is that when we had the Depression of the 1930s, still 20% of the population was living on farms and ranches. Mm-hmm. And now we've got 1% of the population feeding the other 99%. So even if we had a depression on the same scale as the 1930s depression, I think we're going to see a lot more violence because there's going to be a lot more people starving. People don't have.
Oh, yeah, we don't have. I mean, everybody is dependent on other people to provide the necessities. I mean, we have a very specialized economy now, and there's an old saying that specialization breeds extinction. And, part of the problem, too, I just was talking about is the psychology and the mentality of the mob, because you can get a bunch of clear-thinking, clear-headed, law-abiding citizens and put them together in a group, and all of a sudden rationality can go out the window, and people can act in ways that they never would have thought they would have acted under normal circumstances, and justify violence against people that they feel are somehow responsible for the conditions that they're in.
Yeah, that's absolutely right. A few years ago, I was in Reno, Nevada, at a Walmart store, and there was a power failure because a large power transformer just down the street blew out. And you should have seen the panic. People were throwing bags of Huggies in their shopping carts and heading for the door. And this was, in a suburban,
Well, that's just a lot of, people might take advantage of an opportunity to steal if they think they can get away with it. But, what I think is going to happen this time is not just people trying to get something for nothing, but people really acting out their frustrations on society or the members of society, whether it's, going to be the rich. I mean, people who are living in Manhattan, I mean, you have some of the wealthiest people in America within very close proximity of some of the poorest people in America. And it is obviously going to be a dangerous place to be, when it hits the fan. And, and if the governments, of course, are all broke, the question is, will they be able to afford to provide the type of protection that we're going to need in a climate like that?
I don't think they will. I often like to say that FEMA should actually stand for foolishly expecting meaningful aid. The government is not going to be available or capable to provide any kind of disaster relief if we have a nationwide, long-term collapse situation. They can't even handle a short-term, localized situation.
Yeah, I mean, we're talking about a disaster that is not the same as a hurricane or a flood that impacts a particular region. If we're talking about an economic collapse, we're talking about the entire nation being a disaster area. And, of course, the government can't see what the way that FEMA works is you take money from one part of the country and give it to the part of the country that has the disaster. But if the whole country is simultaneously suffering the same disaster, where is the money going to come from?
That's a great question, Peter. As you and I both know, we live in a very fragile, complex society. The chains of supply are thousands of miles long, and we've adopted the Japanese-style Kanban inventory system, so there's no longer a back room at your local grocery store.
All right, well, thanks for coming on the show again. Let's at least hope in this time around that fiction is much stranger than reality, and your book doesn't end up being a prophecy and more of just a sci-fi fantasy. But anyway, be prepared just in case. Anyway, everybody else, we will be back. We have another half hour coming up here on the Peter Schiff Show on SchiffRadio.com.
And now, 855-4-SCHIFF. That's 855-472-4433.
This is Peter Schiff here at SchiffRadio.com. We're taking your calls. We get apologize. I've tried to watch some of this Ben Bernanke, but I'm not getting to hear any interesting points with the few minutes I've been able to tune in. Anyway, if you want to call 855-4-SCHIFF, 855-4-SCHIFF is the number to call. The important thing, or a little bit I am hearing Bernanke discuss, is the fact that his Operation Twist is helping to bring down long-term interest rates. Although today rates we've had a little bit of reversal. Rates are now higher on the day. We've had some reversals. The NASDAQ is now positive. The Dow is still down, but it's cut its losses in half. The dollar actually sold off. The dollar index actually got negative. It's now back to around unchanged, although the only currency that really rallied was the euro. It had a pretty strong rally back up above 132. Mainly, I think the euro rally was even stronger against some of the other currencies, which are still down near their lows. It was really a euro rally that was responsible for the fallback in the dollar index, not the other currencies. But gold prices actually made new lows. Gold's now down closer to $40. So gold hasn't turned around with the stock market, the bond market, and the euro. But when Bernanke was speaking, he also spoke about how easy he thinks it's going to be for him to unwind this policy, to exit this loose money strategy, to shrink the balance sheet. How is that possible? How is it? Think about it for a minute. We've got mortgage interest rates at record lows. We've got the yields on the 10-year at 1.8. We got the 30-year at 2.7. Everybody, and the economy is barely limping along. It's barely surviving with massive amounts of monetary stimulus and cheap money. What would happen to the economy if the Fed were to remove those supports? How is it possible that the economy could survive or withstand normal interest rates, let alone high interest rates? What would happen if mortgage rates went back up to 7 or 8%, which is probably more of a historic norm than where they are now? Not as high as they were, but just kind of like a normal level. What would happen to the federal budget if Congress, if Treasury had to pay a normal rate of interest on its massive debt? What would happen to the banking sector if it no longer could survive on the carry trade courtesy of the Fed? I mean, the Fed has to understand how powerful this stimulus is and how the economy in its present state can't possibly survive the withdrawal of that stimulus. How he can sit there with a straight face and say that he's confident that he can exit this. How can anybody be confident? There is no exit. I called it a long time ago the Roach Motel of monetary policy. You can check in, but you can't check out. I mean, all of the problems that the Fed is trying to solve with cheap money, the minute it thinks it's got it solved and withdraws the cheap money, all the problems are going to be back in spades. And then what are they going to do? The same old thing, right? They're going to have to, all right, well, we're going to have to put the stimulus right back. So, in other words, you can never withdraw. You can't pull the plug on the economy and expect it to keep on living. So if they pull it out for a second and they see the cardiac arrest, they're going to have to shove it right back in. The fact that he's able to say, don't worry about it, I've got this covered, it's just pure lies. That's why I said we got to hook Ben Bernanke up to a lie detector when he speaks, and it would look like an earthquake was going on a Richter scale. It would just be, the thing would blow a circuit trying to keep pace with what he's saying. But anyway, we had a lot of people on hold while my last guest was on. I don't know if people gave up patience. We got a couple people now, but if you want to call back, it's 855-4-SHIFT to get back in the queue, because there's not too many people waiting right now. But I will go to Ed, who has been patiently on hold for about 44 minutes. Ed, welcome to the show.
Hey, Peter, how you doing? I'm a client, called before, but hey, I never give up on you. Your last guest, I have something I wanted to get your. Can you hear me all right?
Yeah, now I can. You faded out for a minute.
Yeah, I'm in an kind of echo in here, but I want to get your opinion on something. But before I get that, your last guest, a lot of people are starting to think like him. That's the scary part. I'm talking to people that would, call me a conspiracy idiot. They're now saying, hey, this could be true. How do you store up food, But sign of the times, I think. But my question on what your thoughts are, there's also a lot of people that believe that the Federal Reserve in cahoots with the government, Geithner and Paulson and all them, Jamie Dimon, they all go from the government, from Wall Street to the government. So it's one thing. They've taken the money. They've got it in offshore banks. And they are looking forward to chaos. And so, this whole communist thing, because it's not going to hurt them. Then they'll come back and take over. I mean, it's half the people live off the government almost anymore. Isn't this what
yeah.
They want this? They want this.
Oh yeah, we have a culture of dependency, and as I said, these kids that are protesting on Wall Street want the government to take care of everybody. They want the government to give everybody a job or everybody a paycheck, everybody health care, everybody education, forgive everybody's debts. Yet somehow society is still going to function, even though we've destroyed all the wealth, all the banks, all the insurance companies, how ignorant people are that they just believe that the government is somehow sitting on this vat of wealth that it can simply dole out to the people, and the fact that the government is not, it's because of greed, that they just want to keep the people poor, and all they have to do is turn on this wealth spigot, and we can all get rich thanks to the benevolence of the government. I mean, the government doesn't have anything. All the government can do is take from somebody and give to somebody else. But if they start taking too much, the people they're taking from, they're not going to have anything left. There's not going to be anything left in the pockets to pick, because you're going to destroy the incentives, you're going to destroy the wealth, and that's what always happens. The communists come in and they steal the wealth of the rich, they divvy it up among the common man, and after a year or two, the money is gone, and now the country is a complete disaster because they kill the goose, and they're not going to get any more golden eggs, once they've done that.
To use a phrase your previous guest, it's fatal complete. Bernanke, they all know this. So they're just trying to get the grid in place with the TSA and everything before the thing collapses. They know there's nothing, they don't want to go through the riots. They know the riots are coming because the money's gone. Right?
Well, who knows what they know? I mean, I don't know. I mean, they could be foolish enough to actually think that this whole thing is going to work, that we could just keep on borrowing and spending money and the world's going to subsidize it indefinitely. They could actually think that. That's how ignorant they could be.
I hope you're right. I hope they're just ignorant, Pete. Hey, one last quick question. Suppose everything does fall apart like your previous guest says. How would you trade your gold? I mean, wouldn't it be better to have smaller amounts or junk dimes, or what do you do?
Well, have a combination. Yeah, I mean, you have. Well, I tell people to have junk silver coins. The dimes, the quarters, $50 for spending money, barter money. We sell that at Europac Precious Metals. I mean, so that's what you want to use for your barter. But yeah, you also, if you have a lot of wealth to store, you want to store some of it in gold, the bulk of it, just to hang on to it. For my people, I'm in the process of launching. I've got my card right now. I have to start using it. These are for my non-American clients over at my foreign bank in St. Vincent's, Euro Pacific Bank. You have a debit card, which you can use to access your gold holdings with my foreign bank. So there, people can transact as long as the ATM machines are working, as long as merchants are able to process debit card transactions. The customers of my foreign bank will be able to spend their gold as easily as anybody else can spend their dollars.
Okay, that sounds great. I'm already a client, so you don't have to sell me. But keep up the good work, Peter. Thanks.
Thank you. Thank you for the call. Next up is, is it Paul in Tampa, Florida?
In Tampa.
Paul, are you there?
Yes. So why
Yes.
not forgive these student debts? I mean, didn't the banks get a bailout? Let these kids start at zero, or they'll have no incentive to work anyway. If I had a giant debt over my head, why go get a job if they're going to garnish my wage? Because these debts are, you can't bankrupt them. I mean, there's nothing wrong with that.
I agree with you.
It never existed anyway.
Well, I mentioned yesterday I have sympathy with the plight of students who, when they were 17 and 18 years old, were conned by the government and the banks into taking on an enormous amount of debt. And now they have a huge debt and a subpar education. But you can't just wipe out the debt and continue with the present system. So the only way I would be in favor of forgiving the debt, and I think it's going to be forgiven eventually anyway, but I think the best way to do it has to be, number one, dismantle all future government aid to education so that there is no moral hazard. Because if the government sets the precedent of forgiving the loan of the students today, well, then students will be even more likely to go deeper into debt. Colleges will jack up their tuitions even higher, knowing that their students will be able to pay whatever they ask for because they won't even have to pay off the loans. They can wait for their debt forgiveness. So we can't forgive the debt in the current system. But if we are going to forgive the debt, we have to realize that that's $1 trillion that it's going to cost somebody. Who's going to pay that $1 trillion? What's going to happen to the people that own those student loans? So can you just forgive all of it, or maybe there has to be some type of condition upon how it's forgiven, some kind of means testing? I mean, we don't need to forgive the debt of a Wall Street investment banker who's making a bunch of money. So I have some sympathy behind what they're talking about, but it has to be done in a certain way. And, of course, do I want to forgive all the mortgage debt and all the credit card debt? Of course not. We can't do that. We would topple the entire country if we did that. Anyway, hey, don't go away. We'll be back. I don't know if you have a follow-up question, but we've got a quick break, and we'll be right back here on the Peter Schiff Show at SchiffRadio.com. This is Peter Schiff here at SchiffRadio.com. We are down to the last segment of the show. I'll see if we can move quickly. I do have a couple of quick clips I want to play from Ben Bernanke. First of all, listen to how he absolves the Fed for any of the responsibilities of the problems in our economy. Here, cut number 14.
On inflation, inflation has come down over the last 30 years, and during my tenure it's been about 2%, which is essentially price stability. So I think the record on price stability has been very, very good, actually, according to BLS statistics. On unemployment, I would blame the current crisis mostly on the financial crisis, when obviously the Fed had some responsibility there, but it wasn't, in my opinion, coming from the dual mandate. It came from financial oversight issues.
Yes, some responsibility. What an understatement that is. It bears the bulk of the responsibility. But to say that inflation is historically low based on these BLS numbers, that's the problem. The BLS numbers are bull. And, of course, inflation is not 2%. It's already about, 3.6, trailing CPI by the government's own estimates. Maybe if he's looking at a certain subset of these numbers, which are worthless, the truth is that inflation is accelerating. A lot of the inflation under the Fed's watch went into the housing market, went into the stock market. I mean, during that 30-year time period over which Ben Bernanke is bragging about how great the Federal Reserve did, the United States was transformed from the world's biggest creditor, the world's biggest debtor. We had the biggest stock market bubble, and then the biggest real estate bubble, and the biggest burst. We're now in the greatest recession since the Great Depression. In fact, I think it's a depression that will be greater than the Great Depression. And we can thank the Federal Reserve and Ben Bernanke for doing his part in helping that organization destroy this economy. And of course, the Fed did not act in isolation. It had plenty of help from the Congress, in front of which Ben Bernanke is now testifying. Congress is to blame, the Fed is to blame, yet they sit around talking as if all of this is happening, all this chaos around them is happening due to no fault of their own, and they're the ones that have to solve the problems when they don't understand that they're the ones that have created these problems. Anyway, let me see if I can grab the remaining phone calls. We've got some more sound. Maybe we'll talk about that on tomorrow's show, play it on tomorrow's show. But let me go to Doug calling from I don't know where he's calling from, but he wants to talk about Occupy Wall Street. Doug, you're on.
Hey, this is Doug from Delaware. Those lists of demands that you were talking about earlier, absolutely communist and ridiculous. I had an alternate list of demands that people should start thinking about, and that starts with the ending of the Federal Reserve and the return of the power to issue money interest-free to the Congress. Also, end high-frequency trading and cut the direct lines that Goldman Sachs and J.P. Morgan have to the exchange to end the front-running. No trading with borrowed money. End the naked short selling. Reinstate Glass-Steagall. And end fractional reserve banking.
Yeah, well, a lot of the problems that you're seeing in the credit market would be gone if we simply went back to sound money. There'd be no need to try to regulate some of these other markets if the Fed wasn't subsidizing them with free money. So if we go back to sound money, if we have a real rate of interest, all this reckless speculation and trading is going to come to an end all by itself. The root cause of all those problems is the fiat monetary system under which we're operating. That is the pollution. That is the toxin in the financial system that has to be removed. Once we do that, the free market will correct the other problems that you're concerned about. Anyway, let me move along to Tim calling from Chicago, Illinois. Tim, welcome to the show.
Hey, how you doing, Peter?
Good. How are you?
I got a couple questions for you. Ultimately, I do believe you are correct in the long term, but in the short term, they're driving down, manipulating the market so they can gain strength in the dollar to do QE3. I mean, and then, QE4, because they can say, look how cheap everything is. Look how strong the dollar is. What's your take on that?
Yeah, I mean, look, they're obviously going to use the decline in crude oil prices and other commodity prices to justify the fact that inflation is not a problem, and therefore they can create more of it by printing money. Yes, I mean, there's no doubt in my mind that Operation Twist is not the end of it, that it's not going to be effective in the way that the Fed desires. And ultimately, they're going to fall back on a more aggressive campaign of money printing, because ultimately, the students are going to be right. We're going to forgive the debt. I mean, that's what the government is going to do. The government is going to forgive the debt. Only they're going to forgive it by inflating it away, not simply repudiating it. But anyway, hey, thanks for your call. Final caller, Adam, calling from Rome, Wisconsin. Adam, welcome to the show.
Hi, I guess it kind of relates to the last question. Is that how many people you think are actually going to benefit? People with fixed rate mortgages, house mortgages, are going to benefit from inflation spinning out of control. People that may have put a little bit of money into gold or.
Well, there's going to be losers from inflation. There's going to be winners from inflation, just like there are losers and winners from deflation. But ultimately, even the people who win from inflation are going to be living in a much poorer country. Even if your mortgage is wiped out because the dollar is destroyed, you may live in a house that you don't have a mortgage on, but, try maintaining it, try heating it, try repairing it. I mean, all sorts of things are going to get more expensive. You might end up living in a home without a mortgage, but renting out rooms in order to afford to heat it or to afford food. That's what happens, you take in borders, a country becomes poor. Even though we wiped out the mortgage, is because we've also wiped out the assets and we've wiped out the value of the currency, which means we can't keep importing all the products from the rest of the world anymore. If we want to consume, we have to produce. But in order to produce, you need factories. Well, where are the factories going to come from? We just can't wave a wand and materialize them. And a lot of it depends on what the government does in the aftermath. If we continue with a bigger government, more regulations, more taxes, we're never going to build the factories we need, and so we're never going to have the goods that we desire. And it's just going to be a poor country, and it's going to be unfortunate. And again, a lot of the young people are going to have to leave if they want employment opportunities, because they're not going to exist here if we continue on this course. So, yeah, you get your debts wiped out, but that's, that's not necessarily going to be a good thing. Hopefully we will have a more controlled restructuring and a dismantling of much of the federal government and a return to sound money and free markets, so at least there's light at the end of the tunnel and not just an oncoming train. But anyway, hey, thanks again for listening. We are running out of time for today's show. We will be back again tomorrow. I'm going to be on Fox Business tonight on John Stossel. I'm not sure what time it airs. I think it's a special, so look it out. I'm recording it this afternoon in the city. Anyway, bye for now. This is Peter Schiff on SchiffRadio.com.